All right, let's jump right in. Today, we're exploring one of the hottest topics in tech right now, the spot where artificial intelligence and cryptocurrency collide. We're going to take a deep look at Bittensor and its token, dTAO, but from a really specific angle, that of a long-term investor looking way out, all the way to 2050.
And this really gets to the heart of it all. It begs the question, is it even possible for one single digital asset to become the engine for a worldwide, decentralized AI network? I mean, that's the massive goal that Bittensor has set for itself. Now, just to show you how high the stakes could be, I want you to keep this number in your head. Some long-term models are forecasting a potential price for a single dTAO token of almost $10,000 by 2050. So the obvious question is, how on earth could it possibly get there? To even begin to understand that, we need a game plan. So first, we'll get our heads around the big idea behind Bittensor. Then, we'll see how its subnets actually create value. After that, we'll unpack dTAO's economics, which are kind of like Bitcoin's. We'll compare staking versus mining, and then finally, we'll look at the big picture, the risks and rewards for 2050.
Okay, first things first. What problem is Bittensor actually trying to solve? Well, it's all about prying open the closed, super-centralized world of AI development that we have today. The easiest way to think about it is like a global open-source app store for AI. Right now, a few huge tech companies control all the best AI models. Bittensor wants to blow that wide open by creating a marketplace where thousands of different AI models from all over the world can compete to provide the best intelligence. And the fuel for this whole marketplace? That's the dTAO token. It's how you pay for AI services, it's how you govern the network, and it's what you stake to earn rewards. But for an investor, this next part is absolutely critical. There's a hard cap of 21 million tokens, just like Bitcoin. That scarcity is baked right into the code, and it's fundamental to its entire long-term value. So, if Bittensor is the big app store, how does stuff actually get done? That's where something called subnets come in. You can think of these as the individual apps on the store. This is the layer where all the real value gets created.
So each subnet is basically its own little mini economy, and it's hyper-focused on one specific job. You could have one for predicting stock prices, another one for creating art, and a different one just for scraping data off the web. And inside each one, you have two key players, miners. They're the ones producing the AI service, and validators, who are like the judges, constantly checking the miner's work and scoring its quality. And this gives us a perfect real-world example from a data subnet. See, the miners aren't just grabbing random data. They get paid to find exactly what the network needs. Information that's valuable, super fresh, and crucially, not something 100 other miners have already submitted. It's this constant competition that pushes up the quality for everyone. Okay, now let's talk about the economic engine itself. Because beyond just being useful, there are some really powerful rules built into the system that are designed to control dTAO's supply and, hopefully, its long-term value. And here we see one of the biggest forces at play, programmed scarcity. Just like Bitcoin, Bittensor has a halving schedule. As you can see, the first one in late 2025 slashed the number of new dTAO created each day by half. And every 4 years or so, it'll happen again, constantly squeezing the inflation rate and making the tokens in circulation that much more scarce. Now, this is where things get really clever. It's a system called dynamic dTAO. Basically, investors get to vote with their money by staking their dTAO in the subnets they think have the most promise. The more dTAO that flows into a subnet, the bigger its slice of the daily dTAO rewards. It's essentially a decentralized venture capital fund, where the market, not some committee, decides which projects get the most resources. And that creates this awesome flywheel effect.
But wait, how does the network keep everyone honest and prevent cheating? Well, that's the job of the UMA consensus algorithm. Think of it as the automated rulebook that makes sure dTAO rewards only go to the most valuable and honest people in the network. It's really smart because it weights validators by how much stake they have, but it also clips, or just ignores, crazy outlier scores to stop groups from colluding. It keeps it a meritocracy.
So, this all brings us to a really practical question for any potential investor. If you want to get in on the action, what's the best way to do it? Let's break down the two main options you have, staking and active mining. This slide pretty much lays out your fundamental choice. Staking is the more passive, hands-off approach. You earn rewards by backing successful validators or subnets you believe in. And a great strategy here is staking on the main root subnet because that gives you diversified exposure across the board. On the other hand,
Active mining is for the tech-savvy folks who want to get their hands dirty, run the hardware, and go for those potentially higher, direct rewards.
And just for those who are curious about that hands-on approach, here's a little peek at what it actually takes. To set up a data miner, for example, you'd have to install the command line tools, configure your software to scrape data from places like Reddit or X, set up your own cloud storage so validators can check your work, and then, finally, launch it and keep an eye on everything.
And let me tell you, being a profitable miner isn't just about switching on a computer. It's all about strategy. You have to be smart, providing the freshest data on topics people actually want, avoiding the stuff everyone else is already doing, and making sure your tech setup is flawless so you have high uptime and validators can always access your data.
All right, let's zoom back out. Now that we know how the network works, what does the long-term future actually look like? Well, it's a classic investment story. You've got this incredible potential upside, but it's balanced against some very real risks. If we look at the numbers, various forecasting models are pointing towards some pretty significant long-term growth. We're talking projections that could hit over $2,000 by 2030 and maybe, just maybe, approach $10,000 by 2050. Now, of course, these are just models, but they do show you the sheer scale of the opportunity if Bittensor gets it right. So what could actually push the price that high? Well, there are at least three massive tailwinds. First, the entire AI market is expected to explode into a multi-trillion-dollar industry. Second, the Bittensor network itself is growing, planning to add way more subnets, which means more opportunities for value. And third, the big institutional money is starting to pay attention, with things like ETF filings and companies adding dTAO to their treasuries. But, and this is a huge but, it's absolutely critical to be realistic and look at the risks. Those daily dTAO rewards create constant selling pressure. The subnets have to prove they can make actual money in the real world, not just ride on hype. And let's not forget, the entire crypto market is wild and volatile, and competition within Bittensor is only going to get tougher. So this really is the core tension, the ultimate question for any long-term investor. Are we looking at the foundation of an unstoppable, decentralized AI economy? Or is this just an incredibly complex experiment that's facing a mountain of pressure? When it all comes down to it, the entire investment case for dTAO hinges on this one delicate race. Can the network create real, tangible value faster than its own reward system creates pressure to sell? The answer to that is going to unfold over the next few decades. Thanks for joining this explainer.